Imagine investing just $30 a week, not $30 a day, not hundreds of dollars a month, just $30 every week. Most people would say that's not enough money to change your life. But what if that small amount could grow into something far bigger than you ever imagined? Today, we're following the journey of David, an ordinary person with an ordinary income. No lottery ticket, no inheritance, no get-rich-quick scheme. Just patience, consistency, and a simple investing strategy. Let's see where that journey leads. Meet David. He's not a millionaire. He's not a Wall Street investor. He's simply someone who wants a better future. Like millions of people, David dreams of one day reaching financial freedom, a life where money works for him instead of the other way around. But there is one problem. After paying bills, rent, food, and daily expenses, he only has $30 left each week. Most people would spend that money immediately. A few coffees, a few snacks, maybe another online purchase, and before they know it, the money is gone. But David decides to do something different. Instead of spending that $30, he decides to invest it every single week, no matter what. At first, it doesn't seem exciting. $30 isn't much. In fact, it feels almost meaningless. Many people quit during this stage because they don't see immediate results. But David understands something important. Wealth isn't built overnight. It's built one small step at a time. So David starts investing every week, week after week, month after month, without trying to predict the market, without chasing the next hot stock, without taking unnecessary risks, just steady progress. And that simple habit becomes the foundation of everything that follows. After a few months, David notices something interesting. His investments are starting to pay dividends. Not much, just a few cents at first. Most people would ignore it. But David understands that even the smallest dividend can become powerful when reinvested. Instead of spending those dividends, David reinvests them. Every dollar stays inside the portfolio. Every dividend buys more shares. And those new shares begin generating dividends of their own. This is the beginning of the snowball effect. Imagine planting a single seed. Over time, that seed becomes a tree. That tree produces more seeds, and those seeds grow into even more trees. That's exactly how dividend reinvestment works. At first, the growth feels slow, almost invisible, but compound growth doesn't work in a straight line. It starts quietly, then gradually accelerates, and eventually becomes impossible to ignore. Most investors quit before reaching this stage because the early results look boring, but David stays focused. He understands that time is his greatest asset, and every week, he continues investing. No excuses, no interruptions. 1 year passes. David has invested every single week. The portfolio isn't huge yet, but something important has changed. He is no longer just saving money. He is building assets, and assets have the power to work for him 24 hours a day. Now David discovers something called DRIP, Dividend Reinvestment Plan. A simple strategy that automatically reinvests every dividend payment back into the portfolio. Instead of taking cash, the dividends buy more shares. More shares create more dividends buy more shares, and the cycle repeats again and again. This is where the real magic begins. Not magic from luck, but magic from mathematics. Imagine a snowball rolling down a hill. At first, it barely grows, but with every turn, it becomes larger, heavier, more powerful. That's exactly what happens inside David's portfolio. Now David realizes something most people never understand. The amount you start with isn't the most important factor. Consistency is. A small amount invested regularly can outperform large amounts invested inconsistently. To maximize his chances of success, David decides to focus on quality dividend stocks, not risky companies, not speculative investments. Only strong businesses with long histories of paying shareholders. His first rule is simple. Choose companies that can survive difficult times. Companies that survived recessions, market crashes, and economic uncertainty, because strong companies are more likely to keep paying dividends. His second rule focuses on dividend growth. A company that increases its dividend year after year shows financial strength. It shows confidence, and it rewards long-term investors. His third rule is diversification. Never depend on a single company. Never put all your money into one investment. Spread risk across multiple businesses. And finally, David looks for companies that not only pay dividends today, but have the potential to grow those dividends far into the future, because future income matters just as much as present income. After months of research, David creates a simple portfolio, not 50 stocks, not 20 stocks, just a handful of quality investments, simple enough to manage, strong enough to grow. Every week, David follows the same routine. Invest, reinvest, repeat. No emotional decisions, no panic selling, no chasing trends, just consistency. Month after month, the portfolio continues growing, not because David is doing something extraordinary, but because he refuses to stop. Small actions repeated over time create extraordinary results. 5 years pass. David looks at his account. The numbers are finally starting to move. The snowball is getting bigger, and for the first time, the strategy feels real. Most people never reach this point. They quit too early. They become impatient. They expect immediate results. David understands that wealth rewards patience. 10 years later, the portfolio has reached a completely different level. Now the investments themselves are contributing meaningful growth. The money is beginning to work harder than David. The dividends are larger now. Every payment buys even more shares. Those shares generate even more dividends. The cycle continues, faster than ever before. David no longer worries about daily market movements. He focuses on the bigger picture. Years, decades, long-term wealth creation. By year 20, something incredible happens. The portfolio begins growing by more money each year than David contributes himself. This is the true power of compounding. By year 20, something incredible happens. The portfolio begins growing by more money each year than David contributes himself. This is the true power of compounding. David is no longer the young investor who started with just $30 a week. But one thing never changed: his commitment to the process. Week after week, year after year, he stayed consistent. Now it's time to see the results. The portfolio David built from small weekly investments has reached an incredible milestone. What once seemed impossible has become reality. David's portfolio is now worth approximately $760,000. Think about that for a moment. All from small investments made consistently over time. But the portfolio value isn't the most exciting part. The real power comes from the income it generates, because assets are now paying David, instead of David working for money. Every year, the portfolio generates tens of thousands of dollars in dividend income that arrives whether David is working or not. Income that continues growing. That works out to more than $5,000 every month, month after month, year after year, without selling the investments. Imagine waking up every morning, knowing your investments are working for you, knowing money continues flowing into your account, even while you sleep. This is what David was working toward all along. Not luxury, not showing off, not chasing status, just freedom. Freedom to spend time with family, freedom to travel, freedom to enjoy life, freedom to choose how each day is spent. And it all started with a simple decision: $30 per week. A small habit, repeated consistently, for a very long time. The biggest lesson David learned wasn't about stocks, it wasn't about dividends, and it wasn't about market timing. The biggest lesson was this: small actions become massive results when repeated for years. Most people underestimate what they can achieve in 20 years because they focus on today's results, not tomorrow's possibilities. David learned to think differently. He learned to think long-term. Every successful investor understands one thing: time matters more than timing. You don't need to predict every market move. You simply need to stay invested long enough. The market will rise. The market will fall. There will be good years and difficult years. But history has shown that patience rewards disciplined investors. David wasn't special. He didn't start rich. He didn't have secret information. He simply stayed consistent when others quit. And that's what makes this story powerful. Because if David can do it, anyone willing to stay consistent can begin the same journey. The first step is often the hardest. Remember, you don't need thousands of dollars to begin. You don't need perfect timing. And you don't need to be an expert. You only need a plan, a strategy, and the discipline to keep going. Week after week, month after month, year after year. One day you'll look back And realize that the small decisions you made today created opportunities you never thought possible. That's the power of long-term investing. So the question isn't whether $30 a week can change your future. The real question is, will you start today? Because the future is built one decision at a time. And your journey begins now.